The mortgage closing is the start of the relationship, not the end. There are people that I know that you would benefit from knowing. There are people in your life as proceed forward through retirement and through home ownership that you should know. It's my job and responsibility to bridge that gap and ensure that all of those tools are provided to you proactively.
Welcome to the Ontario Homeowners Show. I'm Mohsen Lakhani, and this is the show where we get real about what it takes to own, maintain, and love your home. From renovations to raising a family, legal insights to mental health, no topic is off limits. This is about real people, real value, and real conversations to help you live better, right where you are. Each week, I sit down with trusted experts, service professionals, and local changemakers to bring you the strategies, stories, and solutions that make homeownership easier. This is the Ontario Homeowners Show, powered by Devon Real Estate Advisors. Are you ready? Let's go. Mac, thank you so much for joining us today on the Ontario Homeowners Show. How are you doing today?
Hey, Mohsen, I'm doing fantastic, brother. Thanks for having me on the show today. I was really excited when you mentioned that I had the opportunity to be a part of this, so I'm pumped. Thanks a bunch. Happy to be here.
Amazing, man. Why don't you start by telling us a little bit about you and your business? What got you
Yeah,
started?
100%. Yeah, absolutely. So I've been in the business now 5 or 6 years. A bit about me personally before the business side is I'm a father of a little boy. He'll be 1 years old next month. It's incredible how fast time flies. I was born in Canada, but actually raised in Bermuda. So if anybody's ever been on an all-inclusive vacation, you may have been to Bermuda in the past. I came to Canada when I was 18. Had plans of getting a hospitality degree and going home, met a young lady, and the rest is history. I did, however, spend about 12 years in hospitality and the last 6 years in finance. So when I made the transition, I joined Dominion Lending Centers, Canada's largest national mortgage broker. It's one of the big players or heavy hitters in the space and really specialize in anything residential lending. You need anything to do with a home, refinance, etc. I'm your guy.
Amazing, man. Thank you for giving us a bit of an insight into you. And you know what? Let's bring that to life. Can you tell me a little bit about how you've really helped the homeowner in the past year? I want to say past year because last year's been very difficult for a lot of homeowners, right? So how have you helped them through maybe a tricky situation or something that you felt like or they felt couldn't happen, but you made happen?
One that comes to mind just based on what you said around they didn't think things were possible and we were able to provide a solution is actually a client that I helped just recently. Often I find homeowners, once they retire, they haven't put the systems and elements in place for the success with longevity and retirement. Often we think, yeah, I've been doing well. I'll just go to the bank when I need them. And often they find that there's difficulty in doing so. So in this scenario, client, very successful business owner, contractor for many years, had lots of net worth in real estate, but very little income coming in, OAS and CPP only. He needed a line of credit on his property and was told private lending was the only options. High double digit interest rates, just something that he was not happy or comfortable with. From knowing him only a short matter of weeks, we were able to turn that private mortgage offer into a prime lender solution. We got him $1 million line of credit at a prime bank. So saved him tens of thousands of dollars and a client for life. So those are the reasons why we love doing what we're doing and how we can help folks. If you've been told no, sometimes a yes is just around the corner.
Wow. Amazing. So let's zoom out a little bit
Yeah.
and look at the larger picture here. Now, and we're in the business world. We ideally get to pick and choose who we want to work with, right? Who's your ideal client? Who do you enjoy working with the most?
100%. So I think being in the GTA, there's a certain demographics of business that are going to take precedence with certain need and certain demand in the marketplace. So one of those is helping investors, not only investors who are looking to scale in residential properties, but also resale rather, but also through pre-construction. So a lot of my initiative investment in time and understanding in residential lending is around pre-construction. How do we make sure that we can protect investors now while values potentially are not as strong as they were? So pre-construction investors is a big facet, but also helping families work through retirement planning with respects to, hey, You're 45, you're 50 years old, you're retiring in 15 to 20 years. How do we help you build peace of mind, build generational wealth through real estate and not be saving and nickel and diming through those golden years, but actually investing through real estate and allowing that to materialize and mature into your life savings. So those are the two, I think, buckets, if you will, of things that we're finding a lot of success in.
Amazing. And you know what? It's funny you talk about retirement planning. We had a guest on the show, and they're all talking about what to do, how to age at home. And one of the things that they mentioned is real estate's one of the ways how they get to where they want to be eventually, right? And that's a big key player. Now, there's a big difference in people who are able to foresee that where they're headed towards in terms of their health, but then oftentimes, and majority of these people have no idea how health is going to be for them, you know, 10, 20, 30 years from now. So it's great you're having these conversations with the 40 years and 50 years, 50-year olds, just kind of having an idea of these are the directions you should be looking into. It's been great. But now let's talk about what that retirement plan eventually could look like. Amazing.
Absolutely.
Let's dig into something that trips up a lot of homeowners. And even, well, as a real estate agent, even I sometimes might have some of these myth understandings, right? What do you wish about mortgages? What do you wish homeowners knew more about? Maybe a myth or myth understanding or a misunderstanding for that matter.
I think this just comes down to the biggest pain point that we notice the average home buyer has to experience while getting their mortgage. And it's the way that we confirm and review down payment. Sometimes folks can have three or four or five or even more accounts. And what ends up happening is that within a few months of looking to purchase a house, people get this bright idea, but it's actually not a bright idea. It actually is counterintuitive. What they start doing is moving money around. Well, I'm going to take TFSA 10K, RSP 10K, and they end up moving money around. Well, what ends up happening is that every time you move money, we need to track that bank account back 90 days. So we could have 10, 15 different accounts that are all being tracked back 90 days. So I think the biggest thing that would help the home buyer and ease some of that, and honestly, it can be frustration around the process. Every time you send me a bank account, if I see more money coming in, I've got to now trace that back further. I would say, hey, 90 days before you want to make an offer on a house, have all of the money that you need already in that one account. So have the TFSAs, the GICs, the savings accounts, the gift from mom and dad's, all in that account 91 days before you make your offer. That way I need one account, a 90-day history, and then honestly it makes the process far more seamless. It almost feel like a kind of like we need one more thing. We need one more thing when it comes to bank statement review. So to make the process seamless for the lender and for the borrower, I wish there was more general understanding around how to prepare for the down payment.
Wow, that's such an important point. And this kind of perfectly leads into my next question. How do you as a business owner, but also, as part of the industry, how do you help homeowners beyond just getting them or helping them secure a loan? Are there programs, educational programs in place or anything like that that you help them with?
Absolutely. So, what we've actually begun doing in our business is start thinking of the mortgage closing is the start of the relationship, not the end. From the perspective of there are people that I know that you would benefit from knowing. There are people in your life as you proceed forward through retirement and through home ownership that you should know. It's my job and responsibility to bridge that gap and ensure that all of those tools are provided to you proactively. So, what we're doing is that on a 7-day post close review, we're having conversations about insurance in more depth. We're having more conversation about investments in more depth. We're having conversations around wills and estates. And then we start talking about exciting things like home renovations and things that you want to do to be able to ensure you can age in your home. So, when it comes to closing a mortgage with us, we want to make sure that all of the additional elements that we know are going to ensure your long-term success in managing the biggest debt you've ever taken on or proactively spoon-fed to you. I don't want to call you in 6 months and find out that your investments are not where you wanted them to be because you spent all of your money and you didn't think it was important to get those investments back on track. Heavens forbid, there's a claim needed on life or disability and you didn't have the tools and the information necessary at the right time to know that it was important enough to take on. That's my job. So those are the different things that we're going to discuss. And Lastly, on that topic is what we're doing right now is how do we help those families after closing? So we know there's folks in 5 and 6% interest rates that are all waiting for renewal because unfortunately, with ignorance, they don't understand what their options are and they simply think the best way to go is to do what they've always done. So what we're doing right now is a post-close concierge, where we're reaching out after closing and we're making sure that the mortgage you're in still makes the most sense, that your unsecured debts are still being managed and maintained well, and anything else that we can do to help support you or even the business or the company you work for, we're proactively looking for those opportunities.
I I think this is the biggest differentiator between somebody who is a mortgage agent versus someone who's just a advisor at the bank, right? So how much can you touch on that notion? Is there a big difference between somebody who's helping us through the bank versus somebody such as yourself?
I think there would be some similarities. However, I believe there is a contrast from the perspective of when I recommend a financial advisor, when I recommend an insurance professional, when I recommend a plumber, when I recommend a wills and estates, I'm not selling additional products that I benefit from. I think a lot of us forget that the banks are a business. And when they reach out to offer you investments, that's a strategy and that's a retention strategy that they're using in order to keep your mortgage in-house and to essentially sell you more products. I'm coming at it from a very different lens where I want to help, I want to protect, I want to educate. If you get insurance or investments with those partners that I've referred you to, I don't benefit outside of knowing that you have the peace of mind and that your financial plan is still on track. Whereas at the branch, they're going to be very proactive and, forceful, if you will, with their own product base because that's what they have to sell. There might be a better product right next door and you wouldn't know about it. You wouldn't be educated on it by the branch directly. My job is to connect you with someone that can shop the market for you in the same respects that I would and find the best solution, irrespects of commission, irrespects of them making more money. It's really about what puts the client in the best position. I think that's where you're going to draw and see some things that are completely in contrast of working with the branch.
We're seeing a lot of homeowners hesitate before signing that dotted line per se. What do you feel is their biggest hesitation today?
I think the biggest hesitation today is that folks believe or that there's a bit of FOMO, that by taking the solutions today, they may be missing out on something that could be available to them down the road or in the future, or even perhaps maybe they haven't looked at all options. So, one of the things that I've built into our business as a standard and as a guarantee, and every client gets this signed guarantee from me and my partner, is that if rates change at all, between now and closing and rates go down, we actually proactively provide that rate to you without you having to ask. And if rates go up, then you are protected. So the FOMO hopefully would then diminish from that peace of mind and knowing that our team are proactively looking for opportunities for them to save. Their rate will be reduced. They'll be advised the rate's been reduced, and we'll make sure that that carries forward and up until closing day.
That is amazing because I do see a lot of people think that, oh, you know what, I'm going to wait for a drop, or
Exactly.
what if it goes down? There's that notion of rates will go down, yes, but at what cost? And not wanting to push out, no, buy today because tomorrow it's going to go up in values. Well, clearly that's not a strategy we deploy here, but also that's not really a strategy that should be used. At the end of the day, we've seen homeowners or to be homeowners become homeowners, if that makes sense, because they've signed the dotted line, they've made the decision, and at the end of the day, it's all about the education aspect of it that I feel combined. We have a lot to offer, but seldom most people do. So, thank you for sharing that insight. If you had one piece of advice for homeowners, so not people who want to be homeowners, but homeowners in
Okay.
general,
Yeah.
what piece of advice would you offer them?
I think as of late, I've been taking some additional education and additional learning in my business around how we save clients additional money on interest. How do we pay their mortgage off faster? And the colloquialism is cash damming, but ultimately it's the Smith maneuver. And that's something that a lot of folks are not aware of. They think it's overly complicated, or they think that perhaps they don't qualify. So, what I would recommend to homeowners from day one is that start thinking down the road so that if at any time you wanted to add an additional product or service around this tax component, set it up for success from day one. So what does that mean? That means having access to what's called a readvanceable line of credit. Have the conversation with your bank from day one. Make sure that that product is available to you. The reason being is because not only can you take advantage of cash damming or the Smith maneuver through buying investment properties and using that as the additional asset, but you can also do it through a debt swap on investments themselves. What a lot of folks are doing is they're taking their investments, you prepay the advanceable mortgage, you then re-advance, repurchase the investments. Now that entire portion of your line of credit, of your principal mortgage, now this is your family mortgage, now becomes tax deductible. So people don't know about it. They don't realize that there's an opportunity there, so they don't set themselves up for success from day one. I.e., they don't choose a lender that has a line of credit, or worse, they do take a lender that has a line of credit, but they don't add it. So then it costs them thousands of dollars down the road to add it, or worse yet, they no longer qualify. So I would say get in touch with your bank, get in touch with a savvy mortgage broker who can start saying, okay, this is where you are today. However, I'm going to think for you, which is my job. Have you considered X, Y, and Z? And if not, and it's free, why not set us up for success now?
So is this something that I remember we talking about the save 11 years or be mortgage free in 11
Free in
years or
11
something
years. Yeah.
free in
Yeah.
11 years. That's how you're able to help clients achieve that or
Yeah,
part of
that's
it.
that. Yeah, for sure. So the mortgage free in 11 years really comes down to the fact that we've notice that there's three primary pillars that folks are having a pain point around. One of them is the fact that we've got this mortgage, and holy smokes, it's 25, 30 years, could be longer if they've taken a variable. What kind of impact would having your mortgage paid off have on your life in 11 years, in 12 years versus 25 or 30? What would you do with hundreds of thousands of dollars that didn't have to go to interest? This is where people are starting to say, hey, Mac, teach me that. Why are the savviest of folks able to do it and I'm not? And honestly, everyone can. So, just really quickly, the three areas that people are noticing that there's value there and the pain points that we're solving is the first one we've hit. Let's just get this monkey off my back faster. How do I become mortgage free in half the time, if you will, if you think of a 25-year loan? The second one is, what's my retirement look like right now? How much money do I have saved? Am I going to be able to live in my home for 30 years? Let's say the average Canadian, let's say, knock on wood, I'd love to live to 90 and I retire at 65. That's almost 30 years. Like, do we have enough money to do that? And then the other one is, you have children like I do under the age of 2 or 3. We know that university is going to cost 130 to 140K for room and board, food, books, school, clothes. Like sending them to school is 130 to 140K. Where the heck is that coming from? How do we solve all of these issues? Through real estate, through savvy, strategic acquisition of real estate, either active or passive investing, and then seeing where the property value is in 10 to 15 years.
Amazing. It's admirable that you're not just helping with paperwork. I've seen time and time again agents come in and yeah, like here, this is what I need from you and please get this done. I will let you know and that's it. And then a day or 2 or 3 days later, they might come back, hey, congratulations, you're approved for this. End of discussion. Right.
Yeah. Yeah.
So it's good to see that from that norm that we're somehow seeing a lot more of, unfortunately. But you know what? It's guiding the people through that entire journey that helps them grow and ultimately helps you as a business owner, but also by principle help you grow further as well. So thank you for doing that. Before we wrap up, I like to hear from your personal experience, from your personal perspective on what's your experience been like to be an Ontario homeowner.
My personal experience of being an Ontario homeowner, well, I purchased a assignment myself from a initial investor about a year and a half ago. So my experience has been pretty cool because I've closed quite a few assignment sales from the mortgage broker stance or standpoint, but I hadn't ever closed from the buyer's perspective. So it really shows me exactly what the buyers go through, what the concerns of the average buyer are, how I lived through it, and a lot of the, I guess, undetermined variables, especially when buying an assignment. You really don't know the true cost to close until you meet with your lawyer. It's not in black and white on the approval the same way it would be where the closing costs are educated to you. So that's been exciting. The opportunity to see, even in such a short amount of time, the appreciation that we've had in the market. Naturally with assignments, there's that baked in equity, if you will, from day one, but also being able to speak from the experience of an actual homeowner with clients, and being able to identify and empathize and sympathize with the concerns and the plight of those who have had equity concerns or equity challenges, the additional unforeseen cost at times, depending on where they close, how they close, what kind of properties that they buy. But honestly, it just allows me to be, I think, more eye to eye with the average consumer, understanding what they're going through, but also excited, knowing that I've done it, you can do it. This is exactly what I did, and almost downloading the action plan or the game plan that allowed me to save my down payment through FHSAs, through RRSPs, and saying, listen, this is what worked for me. This is honestly, what my family did, and essentially allowing them to follow that same roadmap.
Mac, this was such an insightful conversation. Thank you for sharing this.
Welcome.
Thank you for sharing your story and your experience and your expertise today. Folks, for those listening in, thank you so much for joining us. If you want to learn a little bit more about Mac, his details are going to be shared in the show notes below. Or if you're online on YouTube, you can click on the links in the description below. Thank you again, Mac, for sharing your expertise and your personal stories, your journey in homeownership, as well as how you're helping people become homeowners and homeowners become better homeowners. As always, if you found today's episode insightful, please leave us a rating, comment if you're on YouTube, like and subscribe. See you next time. Take care.